Assalamualaikum and good morning everyone. Today I will discussing an important issue in Islamic finance by focusing on the MAYBANK Islamic, one of the largest Islamic banks in Malaysia and a recognized leader in the global Islamic finance industry. Islamic banking plays an important role in Malaysian financial system, unlike conventional banks that rely on interest-based transactions. Islamic bank operates according to a Sharia principle which emphasizes fairness, transparency, and ethical business practice. Therefore, Islamic bank must ensure that all their product, service and operation comply with the Sharia requirements at all times. Because of the responsibility and risk management has become a very important very important aspect of Islamic banking. Bank needs to identify access and manage different types of risk to ensure financial stability and maintain a public confidence. The first concept is the first concept that I would like to discuss with the overview is that Islamic banking is refer to the possibility of a loose and unexpected event that may affect bank operation, profitability, and reputation. Like other financial institutions, maybe Islamic face a various type of risk, including a credit risk, market risk, liquidity risk, operational risk, and Sharia-related risk. For example, credit risk acquires when a customer fails to repay their financing obligations. Operational risk may occur due to a system failure, human error, or a fraud. This risk can affect the bank performance if they are not managed properly. Therefore, effective risk management is necessary to minimize loss and ensure smooth banking operation. The second concept is Sharia non-compliant risk, also known as SNC risk. This is one of the most important risks in Islamic banking because it is directly related to compliance with Islamic law. SNC risk occurs when a banking transaction contract or a process fails to meet a Sharia requirement. If such a violation occurs, the transaction may become invalid from a Sharia perspective. In action, the bank may face financial loss, reputation damage, and reduce customer confidence. Therefore, Islamic bank must implement strong Sharia governance and monitoring system to prevent such issues. To better understand the risk, let us look at a real-life example involving a murabaha financing contract. In a murabaha transaction, the bank must first purchase and legally own asset before selling it to customer and agree profit margin. However, imagine a situation where a MAYBANK Islamic officer accidentally complete the sale documentation before the bank official own the asset. Although this may seem like a small producer error, it will violate Sharia requirement because the bank cannot sell an asset that it does not yet. That's all for me. I pass to the next person.
So we move to the factor can influence risk management in MAYBANK Islamic. So the first one is customer creditworthiness. This is the one of the most important factors because the bank faces the risk that customer may not repay their financing. Before approving a financing applications, MAYBANK Islamic evaluates the customer incomes, employment stability, existing debts, and credit history. The bank also assess whether the customer has sufficient cash flow to meet a future payment obligations. For example, a customer with a stable income and good credit record is generally considered less risky. This process helps reduce the possibility of default and protects the bank from financial loss. So for the second one, economic conditions. Economic factors such as inflation, unemployment, and economic recessions can directly affect customers' financial ability. When inflation increases, the cost of living rises, reducing customer disposable income. Similarly, during an economic downturn, some individuals may lose their jobs or experience lower business income, making it difficult to meet financial obligation. As a result, MAYBANK Islamic must continuously monitor economic trends and adjust its financial policies to minimize potential risks and maintain financial stability. The third one is Sharia compliance requirement. Unlike conventional banks, Islamic bank must ensure that all product and transactions comply with Islamic principles. Any violations of Sharia rules can lead to financial loss, legal consequences, and reputational damage. In addition, customer trust may be affected if the bank is perceived as not fully complying with Islamic requirement. Therefore, MAYBANK Islamic work closely with its Sharia committee to review products, monitor operations, and ensure that all financing activities remain compliant with Sharia principle at all times. In conclusions, customer creditworthiness, economic conditions, and Sharia compliance requirement are the three key factors influencing the risk management in MAYBANK Islamic. So these factors are essentials because they help the bank reduce financial loss, maintain regulatory and Sharia compliance, strengthen customer confidence, and ensure the long-term sustainability of the bank.
I will be discussing the crucial importance and the real-world impact of risk management at MAYBANK Islamic. Now, let's look exactly why keeping this risk under control matters so much for the bank and the community. First, we have the direct financial loss of the Sharia non-compliance, which is SNC. First, we must look at the strict financial consequences of Sharia non-compliance. In conventional banking, if a bank makes a operational or documentation mistake, they might face a small penalty and still can keep their revenue. But in Islamic banking, the rules are completely different. If MAYBANK Islamic breach the Sharia rule during the transaction, the entire income from that deal will become invalid or tainted. Second point, we have a regulatory burden of incoming purification. So what's happened to the tainted money? Under the Bank Negara Malaysia regulation, specifically the Islamic Financial Service Act, MAYBANK Islamic is legally forced to isolate the fund. The bank must put that money through the strict income purification process, which means giving the entire away the approved charity organisation. If the major corporate transaction worth millions of ringgit experience the risk management failure, MAYBANK lose the millions of dollars of potential income that should have gone to its shareholder or back into developing the bank. Therefore, a strong risk management framework acts as a vital shield that protects the bank from the severe financial leaks. Lastly, the threat to public trust and reputational risk. However, the impact goes far beyond the financial figures. The most valuable asset MAYBANK Islamic owns is a public trust. Customer, investor, and businesses choose the MAYBANK Islamic because they want an ethical, completely Sharia compliance place to grow their wealth. If the public hears the bank is repeatedly failing its internal Sharia audit, that trust breaks down instantly. This creates a dangerous change reaction known as a fiduciary risk, where the large institution depositor might panic and withdraw their massive fund all at once. Once a major banking institution loses the reputation for ethical integrity, it is incredibly difficult and expensive to win back their customer. To wrap up my section, risk management at MAYBANK Islamic is not just a standard corporate checklist. It's a fundamental mechanism that prevents financial loss and protect the bank's secure bond trust with the society. Next, Haziq will guide us to the specific solution. Over to you, Haziq.
Now, I will continue by the solutions to the risk management issues in MAYBANK Islamic based on the factors discussed earlier. First is customer creditworthiness. One major risk faced by MAYBANK Islamic is customer default, which can increase credit risk and non-performing financing. To reduce this risk, MAYBANK Islamic can implement AI-driven credit scoring and predictive analytics. Through AI technology, the bank can analyze customer financial behavior more accurately, such as payment patterns, cash flow, and spending behavior. This helps the bank make better financing decisions and reduce the risk of default in the future. Next is economic conditions. Economic problems such as inflation and unemployment can affect customers' ability to repay financing. To manage this issue, MAYBANK Islamic should adopt a selective financing approach by focusing on stable sectors such as green technology, infrastructure, and digital industries. The bank should also provide flexible repayment structures for customers facing financial difficulties, such as payment extensions under Islamic financing contracts. This can help customers avoid default and reduce financial losses for the bank. Lastly, Sharia compliance requirements. As an Islamic bank, MAYBANK Islamic must ensure that all product and operation follow Sharia principles. Any Sharia non-compliance can damage the bank reputation and lead to financial penalties. To strengthen Sharia governance, MAYBANK Islamic should apply the 3 lines of defense model introduced by Bank Negara Malaysia. This includes management ensuring Sharia compliance, continuous monitoring by the Sharia risk management team, and independent audits to ensure transparency and accountability. By implementing these solutions, MAYBANK Islamic can improve risk management, maintain customer trust, and strengthen its position in the Islamic banking industry.
I will present our recommendation for improving MAYBANK Islamic risk management. Our first recommendation is to integrate generative AI or machine learning in predictive credit scoring. Traditionally, credit risk assessment have relied heavily on historical data like CRIS or SETOS. However, to navigate macroeconomic uncertainties, MAYBANK Islamic must leverage big data. By using smart AI tools, we can see real-time data like market trend and daily cash flow. This allows the bank to see early warning signs months before a customer defaults. This will directly lower the bank non-performing financing or NPF pressure. Moving to our second point, which is expanding the range of Sharia-compliant liquidity instruments. As an Islamic bank, MAYBANK Islamic faces an inherently smaller pool of Sharia-compliant investment instruments compared to conventional banking. If too many customers withdraw their money at the same time, it will create a liquidity risk. To solve this problem, MAYBANK Islamic should work with the Bank Negara Malaysia to launch short-term green sukuk. This will give the bank an easy way to get quick cash when needed without losing money or changing the profit rate they promise to their customer. Our third and final recommendation is MAYBANK should do continuous Sharia tech training and automation for their staff. Sharia non-compliant risks often stem from human operational errors, particularly when navigating the strict operational sequence required in complex contracts like murabaha. To solve this, MAYBANK Islamic must automate this workflow using smart contract. For example, if a critical Sharia step such as asset verification or the correct signing sequence is missed, the system will automatically block the transaction from executing. Coupled with mandatory and continuous regulatory training, MAYBANK Islamic can heavily reinforce bank first line of defense and prevent preventable fund purification issues. That's all for me.